The biggest mistake I see families make after somebody dies is waiting too long to deal with the reverse mortgage. If you've inherited a property with a reverse mortgage, or your parents have one, or a loved one of yours has one, this is the most important thing you need to understand before it's too late. If you don't understand your options, you could create unnecessary stress, miss important deadlines, and make it a difficult time even harder for your family. Hi, I'm attorney Kishore Kapoor, a residential real estate closing attorney here in the state of Connecticut. And every day I share real life stories from real closings so you can learn from my clients' experiences and hopefully have a smooth and stress-free closing. So a loved one passes. It is a really difficult time. Don't make it harder for yourself, especially when dealing with a reverse mortgage. So I'm going to share a couple of stories about reverse mortgages today so you can have a better understanding of how to deal with them and the steps you can take to help protect yourself and your loved ones. So let's start by talking, what is a reverse mortgage? So when somebody's older, they have the option to take out a mortgage that pays them money every month instead of them paying money. They'll have no payments, right? So your house is worth, let's say, $500,000. The bank says, we're going to let you borrow 80% of that so you can borrow $400,000. And this is kind of like an income stream, right? So you can choose to make it as like an equity line where you pull it when you need it, or it automatically just pays you every month. But there are some very strict rules. So after somebody leaves the house because they go to a nursing home or they pass, they have 6 months to pay off this debt and to keep the house. That is key because on month 6, they are going to start the foreclosure and it costs more money. So we represented a young lady whose mother had been, and I shouldn't say young lady, she was probably in her 50s, but we can call her a young lady for this because 50 is still very young. But a 50-year-old woman, her mom had passed, 85 years old. And mom had been living in the house, had taken out a reverse mortgage. The children had no idea, didn't understand what a reverse mortgage was. They just thought, okay, the bank owned the house, we don't have to do anything. Well, mom had only borrowed $300,000 out of the $400,000, and the house was worth about $6. So this family put themselves in a bad spot. But somebody had recommended that they talk to an attorney, and we got connected. It worked out well for them because we connected, I explained to them, we got the numbers of what they owed. We were able to find out that mom only borrowed $350,000 out of the $400,000 she was allowed. So there's $50,000 there. Plus the house had appreciated in value. So we quickly turned around and worked it out, right? We contacted the bank, got an idea of what the payoff was. We got a real estate agent involved, listed the property. The house actually sold for $700,000. Now just think about that for a second. It was worth, the bank had loaned only $350,000, so they only owed $350,000, right? With some interest, it was probably like $356,000. But they were going to walk away from all this money because they didn't understand that they had the right to do something. They automatically assumed mom passed, there's a reverse mortgage, there's no equity in the house, we're just going to walk away. Luckily, a friend of theirs connected us and we made it work out well for them. We ended up selling, like I said, we ended up selling the house, it closed, we paid off the reverse mortgage, and each of the kids had some money in their pocket, right? Worked out really, really well. Now let's talk about the flip side where it didn't work out so well. We had a client who came to us a little too late, and unfortunately the answer is we couldn't do anything. Giving you the end of the story first, but let's work backwards now. And this is where it's extremely important you need to understand. So we have mom and dad owned a house. Mom passed years ago. Dad passes. Dad had taken out a reverse mortgage to make sure he was taken care of. He wanted to stay in the home. The son had also lived at the house and helped take care of dad. And the son's like, okay, no problem. I can stay here. Dad has a mortgage. There's no payments required. No problem. I'll stay there. Well, the son gets the foreclosure notice 6 months after dad dies, doesn't do anything with it. He gets a letter in the mail saying the house is going to be sold off in 30 days. right? The bank is auctioning it off. Son still doesn't do anything. Auction's supposed to occur on Saturday. The following Monday, the son calls me and says, hey, there was an auction at the house sold. What can we do? So, at that point, it's a little too late for us to do anything. But we contacted our referral source for foreclosures. She filed a motion, tried to buy some extra time, and the court shot it down because the buyer actually already put down a deposit, made an offer, got it accepted, and the judge didn't have to reopen it, right? It ended up getting sold. The son moved out. It did not work well because the son and the family didn't act quickly. So, if you are involved with a reverse mortgage, whether it's your reverse mortgage, your parents, you're the executor of an estate with a reverse mortgage, it is very important to understand your options before a crisis happens. Be sure to give us a call or call a probate attorney if you have a family attorney, but call an attorney. Go over your options. Understand that a reverse mortgage needs a little bit of a plan, and we're there to help solve the problem before it becomes bigger later on. So here's a few lessons I am taking out of this and I want to share with you. Lesson number 1 is the second somebody passes or leaves the house for more than 6 months, the loan becomes due. It does not mean that the bank owns it. It means it becomes due, which is also lesson number 2. So we're going to put 1 and 2 together, is the bank doesn't own it, right? But that also gives you options, right? The estate can sell the property. The estate can transfer the property to the children and let the children refinance it, or they can just say it's not worth it, the house is underwater, and work something out where they just surrender the house to the bank. Number 3 is there could be equity in the house after the loan is paid off, and that equity belongs to the estate and typically to the beneficiaries of the estate. So knowing your options and reviewing what debt is outstanding is key to know what your options are. And then number 4, act early. Get an experienced closing attorney. Get an experienced probate attorney. Or better, get an experienced closing attorney that understands probate. Because we can be there to help protect you and guide you so you can understand your options before you take any steps. So this is the way you save yourself if your family has a property with a reverse mortgage, right? There are options there that you can take to protect yourself and potentially protect the property. But if you found this useful, every day we share real life stories from real closings so you can learn from them and have a smooth and stress-free closing. And based on what you watched, YouTube is going to recommend what you watch next. But if you found all this useful and you don't want to miss future videos, be sure to subscribe below.